Hello and welcome to Pro Trader Strategies market commentary for Monday, February the 24th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. Well, I do just that same thing here in these daily market commentaries. I talk about those economic data points that we'll get to here in a moment, how that impacts the overall market and the geopolitical and everything else that's going on in and around the global economies that will affect these markets. Well, we've got a lot to talk about today, right? Without further ado, let's get on with the economic data across the pond. Nothing really to see there. Here in the United States, we've got a couple of Fed governors. I'm going to speed this thing up through the beginning here because we've got a lot to go over, as it is a crazy day. One of the worst days since August of 2014, from what I'm understanding. I haven't looked back that far, but it's not looking too great. Anyway, we've got crude oil coming off by $2.50. A lot of this has to do with the coronavirus and more systemic moves outside of just China. I think Oman even had some cases of it. So there is a bit of a fear going on that this is really going to cause a massive slowdown globally. So we've got crude oil coming off, as one would expect that demand for these, if people aren't traveling, the distillates and gasoline isn't going to be a strong demand. That's causing crude oil to come off here a bit today. Gold really spiking back up. It was testing 1700 earlier this morning. As you can see, 1691, one of the longest or the highest this has been since the 2000 probably 13 or 14, something like that, again during the crisis for the most part. So big spike here. Gold position's not looking too great right now, but you can see it's coming off a little bit. Here we've got bonds up over 2 points right now on the day. We're talking about Fed Fund Futures. Fed Fund Futures forward guidance, making it look like the moves for rate cuts are coming closer. Even some people are talking about negative rates again. I don't think that it is that dire of a situation, you guys. We still have good economic data points coming out. Yes, that could be impacted by this coronavirus, but at this point, it seems like, yes, we aren't going to be doing this boom and bust anymore. And I've talked about this time and time again. We would rather see the market kind of move sideways at this point anyway. Maybe obviously a slightly upward trajectory, but to not have those booms and busts is a good thing, I think. All right, well, April pricing in about a 50% of a 25 basis point cut, and then July an 80% probability of a rate cut there. So July even pricing in part of April, so that means 2 cuts possible for this year. And then we move out to that November. That's where that last reading was, where we thought we were going to get that move. It is still pricing in for a possible 3rd rate cut. So 3 rate cuts this year. I think that might be a little dramatic, but we could definitely see 2 with this impact in the global traction that we're going to be seeing a slowdown here. All right, VIX, massive spike up almost into the 24 handle, as the markets are just free falling for the most part. We've got the Dow Jones down 825 points, but as you can see, well off the lows of 27, so tested to 2,800. So we're about 180 points off of the lows right now. So, we were down almost 2,000, or almost down 1,000 points, but did go down there and break just below that psychological level of 2,800. I was talking about the market coming down to these levels. I thought it would take just a little bit longer. I didn't think we were going to see a massive correction just today. NASDAQ leading the way to the downside as tech is really suffering. We've got them down to 330 points on the day, but again, well off the lows, went down and tested that 50-day moving average. And then the E-mini S&Ps off almost 100 points, again, just off the lows again. I think that this is becoming an opportunity to get in there and buy some names, you guys. Dollar cost averaging, things of that nature. If you haven't been selling puts, we've got volatility through the roof. And I've even gotten directionality right on some of my moves, but this volatility explosion is not allowing me to take profits on some of those positions. This is the mini S&Ps. You can see gapping down overnight and no attempt to flush out overnight inventory, really. There was some buying coming in, as I think some people even thought it was a little bit overdone to the downside ahead of the open, but the market is seeing a lot of weakness. All right, with that out of the way, let's get on with some of the trades that I did on Friday. Obviously got in a little bit early. I got in with thinking United Airlines, they don't have a ton of upside potential with this global slowdown in travel. So I decided to go in there and take advantage of high implied volatility in United Airlines and sold the March 85 calls, which, as you can see, way up here at this point. I didn't think we'd be able to break through that. Plus, we've got this crossover, which is a long-term bearish trend in United Airlines. Went in there and sold those March 85 calls for 79 cents. That being said, with this volatility explosion in there, I was actually seeing those not gain any value. As a matter of fact, yeah, they gained a little bit of value, but not what we would expect on that type of a move. So a little bit upside on the United. I haven't done anything with that, just kind of sitting on those. Going to continue. As a matter of fact, I did that twice in United Airlines. No, sorry, it was Microsoft. Microsoft, I added to this yesterday or on Friday when the market continued to slide in here. Microsoft doesn't have a lot of exposure to China. I think that Microsoft is getting beat up for all the wrong reasons. So I added some upside in here and went into the March, sold the 160 puts in there. And then I originally sold the 160 puts for 86 cents, and then I added to that for $1.29. So my dollar cost average on United Airlines is right around $1 on that, I think. So yeah, it's right around $1 because I did my normal tranche and then did a half a tranche with the add-on there. So put my dollar cost average right around $1 there. And then what else we got? What else did I add? GLD to the upside. Again, volatility going through the roof did not help me out like I would like to see, but it's, obviously directionally right. And I sold in there the March 62.5 puts in there. Gilead, obviously going to probably do very well as a science and drug maker type business, or biotech, I should say. So I wanted to play this to the upside. If anything, they would be doing well. They're doing well today, but you can see, again, I got into that volatility when it was a lot lower, and the directional move being good, but that volatility explosion kind of holding me off. It is doing okay today. I'm not losing money on it, but obviously with that volatility explosion, not doing as well as I could have. So those were the trades I added on Friday. Disney is something that I played around with this one. If you guys remember, I have on the synthetic long in Disney. Yes, Disney should probably be hurt by this coronavirus. I didn't cover the trade, but I'm continuing to stay mechanical with it and lowering my cost basis on this. And if you guys remember, I've been selling in Disney the 160 calls in there to lower my overall basis. I'm long at about 145 in there. And with this move, I decided to get out of those 160 calls, lower that down to the 145 calls in the March, and I sold those for 54 cents. Directional move helping me out, but volatility expanding here is hurting a little bit. But at the end of the day, we're staying mechanical, lowering our overall cost basis on this trade, and that's what we're trying to stay active with. And then finally with eBay, I covered the trade. I got out on eBay at $37.66 on the open. So obviously not as well as I could have done on that, but my break even on this is a lot lower because of lowering my average on this. If you guys remember in eBay, I put this trade on for this earnings and had that stock put to me, and I've continuously sold the 37 calls in there. Sold originally the D's 37 calls, and I collected about 31 cents in there. And then I sold the January 36 calls in there for 51 cents. So we're talking about 82 cents now, lowering that overall cost basis on it. and sold some puts in there for 30 cents that I was able to collect credit for. Those were the 33 calls or 33 puts when I was talking about I'm just going to start dollar cost averaging this if I have to, and was able to get out of those for a nice profit. So I overall lowered my cost basis on this by better than $1, and then covered those for today, $37.66. So about $1.66 winner on that overall trade from that earnings. But that's what we're trying to do, lower our overall cost basis on these trades, and that's what I did with eBay there. So, and doing that similarly, we could talk about with Disney as well. Like I said, I've got on those 145s, lowered my overall cost basis on this trade by about $1, let's say $1.30, $2, $2 on that. So break even right around 145 is where I'm at on that trade there. So with the credit, because I actually was long those at 148 because I did the 145 strikes with a $3 debit, which causes me to have my break even at 148. So lowered my break even on that. What did I say? $1, $2, $3 overall. So right at my break even, and continuing to stay mechanical with that Disney trade. So break even, again, 145 at this point, and sold some calls up there. So I'm going to stay consistent and stay diligent with this. Yes, that is a loser, but this is how we stay mechanical in our overall portfolio. If you get long stocks, today you're getting hurt. And this is the time to take advantage of premium selling, whether you're selling puts, which I think is a great idea in this, and dollar cost averaging. Yes, we've got a big correction going on, but when there's blood in the water, that's the time to go fishing, you guys. And with these types of moves, I believe, and unless you think that this is just going to shut down the overall economy forever, then maybe that's not the time. But I think that this is just a little bit over exaggerated, and probably a good time to start putting your toe in the water. That's all I got for you, other than I got to show you one last thing. Remember that everything is hypothetical. We are an educational company. I am not giving recommendations on anything. I talk about everything as if I were going to do something, okay? So I'm not recommending you to go out and sell puts today, all right? So it's just a thought that is in my mind for what I would do for myself. All right, so please take a moment to read over this, and if you can't take that, take it easy.